Just your views on market performance today. It dropped somewhat, but over the last few days, it had risen as much as 38 basis points yesterday, going back into the 4,600 range.
Well, not really a concern. We've seen the market performing quite well year to date. So, I mean, a little bit of profit taking here and there, nothing really to be concerned about.
All right, counters to watch. I mean, market movers today, Khan General, Ati River Mining, Crown Burger, BAT.
Yeah, we've seen particularly the large movers have been BAT, Equity Bank, and Mumias Sugar. So Mumias Sugar, we've seen investors a lot more comfortable now with the diversification progress, despite the upcoming end of COMESA duty-free period, which ends basically effectively in 2012.
Okay, obviously Mumias has also been able to service debt financing issues for its infrastructure and expansion drive into biofuels.
Yes, basically they are funding their ethanol plant. Some of the funds are going to be funded from internal sources, and then the rest is going to be from borrowings. And this is quite important for Mumias Sugar because, you know, because of the cost of raw material currently, sugar, basically, it's been a big risk for them with the competition coming in from other countries. So the diversification has been quite important for them.
All right, let's talk about BAT, which you agree is also in the spotlight today. Now, it's reported in newspapers in Nairobi that BAT is looking for some kind of review on tobacco legislation. Exactly what's going on and how will this advantage them?
Well, obviously, the argument is that competitors, particularly, say, Masterman, because that's the only competitor, is not sticking to the rules as per the Tobacco Control Act of 2007. So they're seeking a review to see how the advertising rules can be rechanged, you know, to probably make it more flexible on their part.
Okay, let's talk about Safaricom, which has regained its luster in the last few days. They've also apparently unveiled a promotion of 150 million Kenyan shillings as part of the drive to countenance the Zain Bharti involvement in Kenya or entry into Kenya.
It's end of the period. If you look at September, basically that's the end of their first half. Basically, it's just really a promotion probably to reward investors and just to make sure their presence is felt in the market. They cannot cut back on the advertising, especially in the back with the competition that is coming in quite strongly. And you know, in terms of capex, obviously they'll still maintain that momentum into the next year. So I think it's a way of reassuring investors and their customers that they're still in business.
Okay, but with Safaricom, although we've seen them recover, and we use that word loosely, they haven't yet quite hit the 5 shilling psychological level. Why is that?
I think investors re-rated the stock when we saw Bharti cutting the rates. And you know, that forced Safaricom as well to cut the rates as well, the calling rates in particular. So, you know, we've seen it rebound from its lows, but obviously it's unlikely to come back to these previous levels until we see the earnings and for the first half and then guidance on the full year.
Okay, other stocks that have been interesting the markets over the last few days are also Kenyan Airways, EABL, the housing company of Kenya, and Crown Burger. Do you have any opinions about these ones?
Well, I guess EABL would be a key one because it started trading ex-dividend today, so the price adjusted. We got the circular from on the Serengeti deal, and that gave a lot more detail on the surrounding the deal. So that provided a lot more clarity. And investors, I guess, will probably be looking at the stock to see how well demand and supply sort of holds up in the coming days.
Could you just tell us a little bit about that deal? Because we know that EABL, although a major player in Kenya, has been struggling to make inroads in neighboring states like Tanzania, for instance. So with the consolidation of the East African community, with a management shake-up within the company, the growth strategy going forward and dealing with some of these stumbling blocks, how do they plan to go about it?
Well, I guess one of the key things that we saw there was that in 2014, they'll probably be looking at buying Serengeti entirely. So I guess that's probably one of the features that we probably weren't very aware of. The deal obviously is still pending, but at least the idea is that shareholders will be called to approve on the details of the deal.
Okay, and those who are unfortunately losers in the market, but nonetheless quite active today, eGuards, one of them, CFC, Stanbic. Any opinions on these ones, other ones to look out for?
Well, nothing significant. If you look at eGuards, probably it's been a bit of profit taking. It's done very well year to date. CFC, Stanbic, quite a bit of uncertainty. And the two counters as well are very thinly traded, so it's very difficult to read into thin volumes.
Okay, and then let's talk about the fact that foreigners were told their sales amounted to about 137 million Kenyan shillings, and their buys amounted to about 208 million Kenyan shillings. So effectively on either side, foreigners are back in the market. They are restoring confidence to the market. But is this sustainable? Because we'd seen them pull back significantly before the referendum, and we'd seen them coming back very slowly post the referendum.
Obviously, foreigners are currently accounting for a much smaller proportion of the market than they've done in the past. So we are seeing them accounting for between 20 and 30%, whereas previously they've accounted about 50%. So local participation has been very key in driving the market.